You're lying in bed at midnight, scrolling through real estate listings, and suddenly you realize a painful truth. Any house that doesn't look like it's about to fall down or collapse costs around $500,000. Outdated kitchens, faded carpets, fake wood paneling in the basement, yet the agent still calls it a perfect starter home. Meanwhile, you start calculating your salary and wondering, did I miss some massive promotion, or has the housing market completely lost control? The answer is simple. It's not you. The problem is the numbers, and those numbers are brutal. Today, we're going to do something the real estate industry doesn't want you to do. We're not asking how much the bank will lend you. We're asking whether you can actually live comfortably with that loan. Because being approved for a mortgage and being able to sleep peacefully after buying a house are two very different things. Let's look at reality. In many U.S. cities, $500,000 is no longer a luxury home. It's the minimum price for an average house. Modest size, small yard, basic features. At the same time, the median household income is around $84,000 per year. That means people are being expected to buy homes that cost 6 times their annual income. If that sounds unreasonable to you, you're thinking correctly. Yet society keeps telling us that anyone can do it. Banks say you qualify, older generations talk about buying cheap homes, social media is full of success stories. The truth is, the idea of affordable housing has been distorted. Let's start with the down payment. In the past, 20% was the standard. For a $500,000 home, that means $100,000 in cash. Meanwhile, the average American savings account holds about $8,000. That means most people aren't short by a little, they're short by a massive gap. Even if you manage to save 10% of your income every year, something very few people can do, it would still take more than a decade to reach that down payment, not including future home price increases. So many buyers choose smaller down payments, and in exchange, they get PMI, Private Mortgage Insurance. This is a monthly fee you pay simply because you're not wealthy enough to put down 20%. Even worse, this insurance protects the bank, not you. Now let's talk about the monthly mortgage payment. With a loan around $450,000 and today's interest rates, principal and interest alone come close to $3,000 per month. But that's only the tip of the iceberg. You also have to pay property taxes, homeowners insurance, maintenance costs, and PMI fees. When you add everything together, total monthly housing costs easily exceed $4,000. This is where financial guidelines come into play. Experts recommend spending no more than 28% of your income on housing. Banks, on the other hand, allow up to 43%. To stay within the safer range, you would need nearly $190,000 per year to buy a $500,000 home without heavy stress. Even using the bank's looser standard, you'd still need about $150,000. Only a small percentage of the population earns that much, which means most Americans are being pushed into mortgages they cannot truly afford. Imagine a household earning $160,000 per year. After taxes and deductions, their take-home pay drops significantly. Once housing costs are subtracted, they're left with roughly half their income to cover everything else: cars, insurance, groceries, healthcare, education, and utilities. That remaining money is thin. One unexpected expense, car repairs, air conditioning failure, medical bills, can easily push them into financial trouble. This is what it feels like to be house poor, owning a home without financial security. At the median income of $84,000, buying a $500,000 home isn't difficult, it's unrealistic. What makes this worse is that the system has no incentive to stop you. Sellers want higher prices, banks want more loans, agents want deals closed. No one is responsible for your long-term financial stability.
Once you sign the contract, you're locked in. Walking away later comes with serious financial consequences. The harsh reality is this: most households cannot sustainably afford a $500,000 home. This isn't a personal failure, it's a structural market problem. Home prices are rising faster than incomes. The gap keeps growing, and we keep pretending this is normal. You can't fix a systemic crisis by skipping morning coffee. Buying a home is not a victory if it steals your sleep, traps you in stress, and prevents you from building real wealth. True wealth isn't owning a house that stretches you to the limit. It's having financial control, emergency savings, consistent investments, and a life free from constant money anxiety. If the numbers don't make sense, walking away is not failure, it's intelligence. Sometimes the smartest move isn't joining the game, it's realizing the rules are broken and choosing not to play.